Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So today's video mostly not the analysis of the current situation, not analysis of some new trading setups, but mostly some kind of the announcement of what could happen on the gold in the nearest few weeks. So in general guys, as you can see, market shows really great performance on the higher time frames, especially you could see on the monthly chart. As we already talked about this in our long-term analysis previously, that we consider that 1650 lows that have been formed 2 months ago are really great lows to consider investment. So buying bullions, coins, anything, everything that's actually exclude the using the margin. So theoretically, you could even try to buy futures without using the margin. But you understand, when you're holding gold in your hands, it's much more reliable than if you have some digital contract somewhere in a system. So that's why we called to buy the bullions. And I know that many of our farmers have made this and is buying the physical gold, and now they are really happy. But those of you who haven't done this, you should not be upset with that, because the upper direction is just starting. And based on the performance that we see on the monthly chart, it seems that, well, previously we thought that it should be another significant pullback on the gold before the major reversal starts. But currently it seems that, based on the current performance, it seems that it might be already started. So that the new extension, like long-term rally on the gold, is starting right now. You could see that the market jumps above the 30% resistance on the monthly chart. That was the necessary level to complete based on the free drive buy pattern, triple two buy pattern that we had out in the monthly chart. And it behaves too aggressively to suggest that this is minor pullback. I don't exclude the chance that it might be really upper direction, because less and less time stands until the Fed capitulates. So it is housed in its reserves, as we discussed in the recent weekly report, and somewhere in the end of the spring these reserves will be totally exhausted, and they will not be able to support markets. They will not be able to finance spendings, which means that they will have to turn to the easing once again. So that's what we have on a longer term. So we will discuss this in the weekly report, but in 2 words, I start thinking that it might be the case. So speaking on the short-term perspective, so currently you could see market has completed our 1896 area. So currently we are not considering taking the new long position, just because we probably need to wait for a pullback, because this is not just the OP extension. This is also strong weekly 618 resistance level. And this is rather strong, and it means that, well, at least technical analysis suggests that it should be some more or less pullback out from this level that should let us to take the position at a better price. At least by the technical analysis, this is not a good idea to buy right at the strong resistance levels. Speaking about next upside target, so if we take a look at the same ABCD pattern, you will see that the XOP stands around 2000 even. So very close to the previous stops. So that might be the next level that market could start moving, if our suggestion is correct, because market currently is really very inspiring with the stable inflation that suggests that it should let Fed start easing earlier, as you do not see rising on the prices. But as I said in today's Euro video, that we are giving you the hint that nominal inflation is converging to the core inflation, and markets mostly do not see this. It means that maybe inflation starts to lose the pace and fade the outbreaks of the energy prices, for example, but and some furniture repairing materials for real estate is also dropping just because real estate market is collapsing. But you could see the rising of the rent price, you could see rising of the food, services, and it means that core inflation with the 5.5% stand for a long time. And it definitely will be longer than Fed could let it. And the Fed's margin safety could let them to keep the rate hike. And that is really the core of the possible rally on the gold. Because if we're correct somewhere close to the summer, the real rates starts to drop back and also could turn to the negative territory within the 1-2 years. Well, this is just a suggestion by far, but we do not see currently in the fundamental background that something is changing. So mostly this corresponds to this scenario. So on lower time frame, you could see what has happened. Actually, here is our dynamic pressure works really nice. Market has formed high wave pattern right there, and price stands inside of it. So as I said, if you intend to take the long position, it would be better to consider some pullback. Just based on technical picture, the weekly agreement is a strong enough area that we think that we need to take into consideration. On the hour chart, you see the completion of the minor butterfly that we discussed. So initially we talked about the big butterfly pattern right there. So it was forming as a tightest standing target. And here you can see this minor butterfly also has been formed. So it has been completed right at 1896. So it's a reaction on this target just to the downside. So that being said, gold really looks inspiring right now. We're considering bullish context, but technically it's just not a good level to take the new position. We need to wait for a pullback. Bears currently probably should sit on the hand, at least until we will see some bearish signs. For instance, if market starts showing some reaction of this resistance, forming intraday bearish patterns, in this case you could consider taking the short-term bearish position. But currently, and especially on the high time frames, I do not see much to do for bears.